everybody, it's Maggie. With the Federal Reserve cutting interest rates, mortgage rates have dropped a lot this month. According to Freddie Mac, the 30-year mortgage rate is now 6.12%. The 15-year rate is 5.25%. Some of our clients even received pre-approval letters with rates under 5%. So how has the rate cut affected the real estate market? Will Seattle's housing market return to the crazy buying frenzy of past years? Today, we'll look at the latest market data from September, and I will also share my thoughts on the future of Seattle's housing market. Let's start by reviewing on the overall data for the greater Seattle area. According to the latest NMLS data from September, the median home sales price in King County is $865,000. This is an 11.6% increase year over year. The average price per square foot is $532, which is up by 6.2% from last year. In September, both home prices and price per square foot in King County increased slightly compared to August. This rise may be influenced by lower interest rates and the end of summer. There were 3,631 new listings in King County, a 26.3% increase year over year, and a 20% increase compared to August. At the same time, there were 2,430 pending home sales, up by 32.4% from last year and about 20% more than August. Even though sales have increased, the number of active listings still exceeds sales. This means the months of supply in the market continues to rise. In September, there were 5,824 active homes available in King County, a 34.4% increase from last year. This is the highest level since 2020. This month of supply has grown to 2.9 months, compared to 2.1 months last year. This is the longest supply period we've seen in nearly a decade, since 2014. If we break it down by area, the trends in Seattle, the east side, and the suburbs are pretty different. Some areas have much higher inventory, while others are still tight. In Seattle, the number of new listings grew by 50% from August to September. However, sales only increased by 10%. This led to an oversupply, pushing months of supply even higher. As a result, downtown Seattle's price per square foot increased by just 3.6%, lower than the greater Seattle average. Meanwhile, the rental market in Seattle has also struggled. According to Apartment List, median rent dropped by 0.7% year over year. Many landlords are seeing longer vacancy periods and lower rental income, which is driving more people to sell their properties. On the east side, the market is still very competitive. After the rate cuts, the number of listings in Bellevue didn't even change that much. There are only around 300 homes for sale in Bellevue, and they are selling faster than in other areas. So because of the low inventory, home prices in Bellevue have gone up by 6.6% compared to last year. The demand here is still very strong, and homes aren't staying on the market for long. So we compare the home price changes in different areas and found some differences. In suburban cities like Monroe, Mill Creek, Edmonds, and Maple Valley, home prices haven't increased as much. These areas don't have big commercial centers, so prices have risen the least compared to other cities. And now, many companies are asking employees to come back to the office, so people are choosing to live closer to work instead of farther out in the suburbs. So let's go back to the big question. Has the real estate market recovered since the rate cuts? Will Seattle's housing market heat up this winter or next year? These are signs that the market is picking up, both nationally and in Seattle. We're seeing positive changes. So according to Redfin, the number of pending home sales has stopped dropping after 9 months of decline. At the same time, the demand for home tours went up by 9%, the highest level since April. Optimal Blue data also shows that mortgage applications went up by 10% in late September, which means more buyers are coming back to the market. In the Seattle area, we also see clear signs of recovery. In September, the number of new listings and pending transactions increased by 20% compared to August. From my own experience, the market felt much more active after the rate cuts. Our team received more inquiries from both sellers and buyers. Many sellers are eager to list their homes. Buyers who had been waiting for better rates are finally taking some actions now. So all of this data shows the impact of the rate cuts. I believe the housing market this winter will be busier than it has been in the past 2 years. As for next summer, there are still a lot of unknowns. The latest employment data shows the U.S. added 254,000 jobs in September, and this number was much higher than expected. Because of this, the Federal Reserve might slow down rate cuts. They were expected to cut by 50 basis points each meeting, but now it might be 25 or even none. So next year's housing market depends on so many things. It depends on how fast rates drop and how fast the inventory climbs up. During the coming few months, we'll just have to wait and see. Next, I want to offer some advice for both buyers and sellers. Whether you are thinking about buying or selling, these tips should help you navigate the market. If you're looking to buy, now it is a great time to start. Interest rates are lower, and there are more homes on the market. Talk to a mortgage broker to see what rates you can get. Start looking at homes and be ready to move fast. For sellers in downtown Seattle, there's a lot of competition. It might take longer to sell, but prices are stable. Be patient and make your home stand out. In Belleville, Redmond, Kirkland, or the East Side, it's a great time to sell. Low inventory means you can sell quickly and at a great price. So to sum up, the Seattle housing market is showing signs of recovery. The rate cuts have started to impact the market, and we are seeing more activity. Buyers are coming back, and sellers are getting ready to list. This winter will likely be more active than last year, especially when more homes on the market. Whether you are a buyer or a seller, now is the time to start planning. Thanks for being here today. I hope this update gives you a better idea of where the Seattle market is heading. Feel free to reach out anytime if you're planning to buy or sell. It's Maggie, and I'll see you next time.